the main event here. We wanted to talk about this 10 markets for rookie investors shared by BiggerPockets. That's the top 10 list.
Yes.
Let's talk about, first of all, were you surprised?
No, not that we were number one.
Did any of these cities surprise you? You're not surprised that Jacksonville's number one. You've been investing millions of dollars into Jacksonville for a long time. Did any of these cities surprise you?
Raleigh surprised me. Atlanta surprised me.
Yeah, I would say
the
that's
higher price markets surprised me a little bit.
Sounds good, buddy. Well, these lists, any other listicle, right, that people do is arbitrary. You ask one investor one, they might do 10 different ones or in different orders or whatnot.
Right.
I think it's good to think about kind of like the thing behind it, right? So this article talked about what makes a good rookie market that had 4 market tests. One is, can I afford to get in? 2 is there strong rental demand? 3 is the economy diversified? 4 is, can you survive mistakes as a rookie investor? What do you think about those 4 as an overall criteria?
I like it. I like it a lot.
Yeah.
So,
Do you think, can I afford to get in, number one? Is that
no, for me, I am very risk mitigated in all things that I do. And so for me, and if I was putting myself back in the lens of a rookie investor, survival is the most important thing on your first investment. And then the ability to grow in that market over time is really how you win. So if you don't survive your first investment, there's no way you're going to get to number 2. If you strike out first at bat or bad experience, you're going to give up. You're not going to come back. And so I would go with survival as the most important thing.
So that being said, key to survivability.
The right team. The right team is the most important thing. If you don't have a team that is worthy of managing your money, you should consider market or that investment or really rental property investing long term. It is all about the team. That is the first most important thing, because the team is what turns those fancy formas into money into your bank account. And the team is what controls the experience for you to make sure that this is something you're going to be excited about for 5 years, for 10 years, for 15 years, 20 years, so that it can produce these wonderful outcomes.
I would be more specific about survivability. Team is the reason why. The reason to survive is experience, and the experience is provided by the team, right? Like, I think more broader, it's the experience of it. Like, how much stress does it provide in your day-to-day life? How many KTAs is what I call it. How many kitchen table arguments are happening because of this like property that you invest in with your significant other? Like, how smooth is this thing overall is absolutely what I say like survivability is all about.
Oh, I think you're 100% right. And that's the reason why most people know that you can make great money in rental property investing. That's not really debated. If you buy and you hold, most people know that you're going to end up winning. But even though we generally all know that, vast majority of Americans do not invest in rental properties. And the reason is because of the experience. Because it has been so bad for so long for so many people that they knowingly give up an asset class that could really change their financial future because they're so scared about the experience. So
love it. So let's dive a little bit more into the kind of like the criteria. Survivability is number 1. Then there's affordability, strong rental demand, diversified economy. Which one would you rank second on your list there?
Well, are we talking about overall importance, or are we
For
talking
rookies?
for rookies? I just feel like there's kind of like a linear approach to it. Affordability is probably where you start first. Because if the market is too expensive and you can't afford to get into it, doesn't matter how great the economy and the rental demand is, you're just not going to be a player in that market. So it does need to be affordable, not just for the amount of dollars that you have, but affordability is important because at the end of the day, we need to be buying assets that pay for themselves every single month. And so it's not just, do I have enough dollars to buy a house in this market? It is, do the numbers pencil so that this asset can produce monthly income every single month for you? So affordability, number 1, if we don't have enough budget to buy something in the market, we can't get in. But even more important than that, make sure that there's positive cash flow from day one. And that's really why I would start with affordability. The opposite is true. If you buy in a market that is unaffordable, you're creating a negative flywheel. You put a lot more money out, maybe twice as much money out, and then that money is producing a liability for you. It is costing you money every single month. And so you're just not like really fired up about putting twice as much money out the next time to go another $200, $300, $400 a month negative. That's negative fly.
The experience is less.
The experience is less. It all boils down to experience.
It comes back down to experience.
But no matter how nice the people are and how much they are on their stuff, if you're negatively cash flowing and you're creating this negative flywheel, you're not going to come back and buy 3, 5, 10 properties and hold on for 10 years. And that's really what you need to do in order to achieve that financial outcome. I
mean, I think it's just a straight line. Negative cash flow lends itself to being a negative experience.
Yeah, it is a very big determinant. Agreed.
In a big way. All right. So that's affordability. Then is strong rental demand kind of like the next one?
Yeah, that's where I would go next.
Yeah.
Because in order for this to work, now I'm moving beyond day one. The affordability is like, how do I set this thing up right from day one? The affordability is important, but quickly it goes to maintaining and growing this experience, maintaining and growing this positive cash flow along with of the stuff that the team needs to control for you. And so a big part of maintaining and growing and having a long runway for positive cash flow comes down to rental demand. And that's where I would go next. It's, how big is your renter population? How big is your population growth so that it is feeding more both positive renter growth as well as home base growth? And that's where you really start to think about the jobs and the economy that comes into support. And so rental demand is where I would go next.
It keeps coming back with experience, right? Like it's still kind of like experience is like the number one domino, right? So it's like if there's low rental demand, then I'm just always going to be afraid that my renter's going to leave.
You need your first at bat to be a single, double, if we can get a triple run, that's great. But it needs to be you need on base, right?
Triply on.
Well, the way that you are going to feel like you're on base is when your house is occupied. And
it's a little money.
And it's making at least a little bit of money. And then the way you're going to feel really good about this being a double or a triple or a home run is seeing that there's a runway for positive rental growth along the way. Because majority of your expenses are flat. So as you get rent growth along the way, that $100 a month in cash flow day one turns into $300 a month in a few years or $500 a month. So if we want to get on base and we're thinking about this from the rookie lens, strong rental demand leads to high occupancy, and over the long haul, you're going to see significantly more rental price growth, which is really important.
Got it. And then the last one is diversified economy. This feels like something a rookie themselves.
Yeah, not enough to do.
Yeah. What's important about that?
We got to understand the economic job base substantiating the rental demand and the rent growth. We have to understand of jobs and how many jobs and are the jobs growing, and really what are the financial anchors that are substantiating your marketplace. And it needs to be more than one. Some of these out there that are a main stop for one employer, and if that one employer, the CEO wakes up on the wrong side of the bed or does something. We've seen CEOs that are just out and about and all of a sudden business is very different because they made a boneheaded decision. Well, all of a sudden you're at risk. You have one financial, economic employer that is really driving the economy there. So we've got to understand our job base. You have to have multiple, very strong and long tenured and companies. The best way to look at that is your Fortune 500 companies. And it's really easy to find. The economic data is all free to find. It's very easy and accessible. Just a lot of people just don't know where to go. An easy way to look at is how many Fortune 500 companies have headquarters in your area. And that's an easy way to tell. None is the answer. Might not be the right place, right? If it's only one, probably need to do a little more due diligence. When you start to get to 2, 3, 4, 500 Fortune 500 companies, that's when you really feel like you have a diverse economy.
I think Fortune 500 companies is good. I would say I would be more interested in how concentrated is your local economy in one industry, right? Like what I experienced in Miami before Miami became like a more full city was that when tourism went and when construction went, Miami went, and that was like really big ups and downs. They had a handful of Fortune 500 companies, but like if it's too concentrated in one sector, then if that sector struggles, then you're in trouble, right? Like look at heavy places that don't have other economies, it's a volatile part of the economy, right? So like when the tech sector goes, it goes, right? So it's like, I think Fortune 500 companies add a level of stability, but to the point of, how much does the town get disrupted if like some industry gets hit? Probably a pretty good measure, right?
You're spot on. And look at this as kind of like a, what is easy information to kind of understand and comprehend. Rookie investor, look up the number of Fortune 500 companies here, right? It's easy to understand. What you're talking about is probably more important. It's just harder to understand and define and get that information, right? It's not very readily available as far as like how much of your economy dependent on the tech sector or transportation, logistics, or military or government. Got to dig a little bit deeper. So I totally agree with you that it is probably more important to understand the composition of the industries to make sure you're not too dependent on one industry. But it's just a little bit harder. So that's where I think we start with Fortune 500 companies, and then you continue to dig a little bit deeper.
Yeah, that makes sense.